Looking back on our options trades spreadsheet, this is the covered call. Visually appealing. This is how I get a quick look at where I stand on covered call opportunities. Contracts represent 100 shares apiece. Flex the amount of contracts or the amount of shares that I own in the portfolio. So we just put the Verizon contracts to work, collected some dollar bills. Wanted to look at the AT&T and keeping this cost basis in mind. We've got an 1825 cost basis on AT&T, and we have 10 contracts to deploy. We need to deploy them, but typically AT&T doesn't have a whole lot of premium available on their trades. So currently at 1759, just in the green, so that's good. Might be able to get something for these. I'll take anything, basically anything that's over the 1825. So we got zero. He got zero right there for Friday. Thanks a lot, AT&T. We go out 10 days, you can collect 2 cents per. That'd be $20 total. And I know that sounds ridiculous, but it's okay because it's $20 that, you guessed it, I didn't have before making the trade. Let's just do the math because it looks like very unreasonable, but it's okay because we're going to use our cost basis. So 2 cents divided by our cost basis of 1825 divided by the number of days, which is 10, multiplied by 365. So that's 4%. Wow, wow, wow. It's down low. How can you go? But it's 4% annualized. Okay, so we'd have to trade that over and over and over again. But we'd be collecting dollar bills each time. So, essentially, you would be able to make this trade 3 times a month. That would be $60 extra per month. So $60 extra. There's 12 months in a year, last I checked. That's $720. And then we add that to, if we were to look over on the Seeking Alpha, let's see the dollar amount that AT&T pays out per year per share. Continue our little math formula just for fun, fun and game, and hopefully profit. So it's $1.11 annual payout. We have 1,000 shares. Is that right? Yes, that's correct. 1,000 shares times $1.11. I think you could do that math without the calculator. I know, but the calculator, the abacus is fun. That's $1,110 plus what we were just talking about with the 720, right? So that's $1,830 in income per year. And we are at 1825 times 1,000 shares. So our investment is roughly $18,250. So if we take the 1830 in income and divide it by the investment of $18,250, we end up with an annualized of 10%. I mean, who wouldn't take 10%? Can you hear me now? Yes, I can. I can hear you loud and clear. And 10%, that's not too bad. That isn't too bad. Let's go back here and just look another week out and see what's up. 17 days out, doubles it to 4 cents. But what does that do to the math annualized? 0.04. So there's 0.04 divided by our cost basis of 1825 divided by the number of days. We added 7 days to that formula, carry the 1, we'll end up with 4.7. Hey, that's higher than the 4 we were talking about. Okay, so that's 4.7. What if we go out another week? Does it get any more fun? Let's go out another week to the 24th. It's up to 0.06. 06 divided by 1825 divided by 24 days. And then we annualize it 365. Hey, now we're at 5. It's getting fun. Is it? Are you still awake? Wake up. Yeah, you're still awake. Okay, so now, so for the May 19th strike, we're at 5% annualized. Now we're cooking with peanut oil. We go out to 31 days. Hey, we're up to 8.088 cents. 0.08 divided by cost basis 1825 equals this divided by the number of days 31 equals this multiplied by this 5.16. I mean, what else are you going to do with the shares? They're just sitting there lonely. Are you lonesome tonight? Another week doesn't get us even more return, does it? Now we're at 11. Hello. And it's up 8.33%, this particular strike on this trade. That could be something. Hopefully you don't get too bored while I run my numbers live. We'll do it live, but this is just the thought processes that I have in making these trades under no time constraint. Currently no hurry to make this trade. Divided by 38 days, multiplied by 365. 5.78 annualized. At some point, this comes down, doesn't it? Let's check the next dividend date also. Let's go to the dividend history, get an idea, because I know I've got a pending dividend now from AT&T. So the next date to be concerned with, not at this moment, but just going forward, will be that July 8th, because they're very consistent in that it looks like last year, July 8th was the ex-dividend date, July 8th, July 9. So that is something in the back of our minds to try to protect the next round of dividends. So this is June 2nd, right? Where is the diminishing returns? Does that come into play? June 16th, let's go to this date. So now we lose our 50-cent strike. Now we lose the 50-cent strike right there. Now you could do math on the $19, because then that theoretically adds 75 cents per share to your cost basis of price appreciation. So right now, it's going to be the June 2nd. It's going to be the June 2nd. Can we get that 11 cents? Oh, yeah, we're going to get more than 11 cents. We're going to get 12. Do it live. Get $120 for the covered call on the AT&T. See if we can fill that and get $120. Currently going once, going twice. Let's replace it. Go to 11. Go to 11 and get it filled. Oh, it's showing me that spread again. What is it doing? It's bouncing around. Let's try one more time at the 120. Just for fun. Do you want to leave it up there for a minute? It's only $10. Just get the trade and move along. Fine. Fine, I'll do it. Jeesh. Get your own tots. Oh, if that little glimmer of a line rang any bells, make sure to comment down below that it did ring some bells, and the movie that I'm referencing. Okay, see, look, we messed around and got a triple double. We put in the 11-cent credit, but they ended up filling us at the 12-cent credit, and we collected the $120. $120. So that even makes our math even better now. Okay, so $120 divided by our investment of $18,250. Okay, divided by 38 days, multiplied by annualization. Now it's up to 6.3 on top of their yield, which is over 6%, correct? Yeezy, what do you say, Yeezy? It is 6.33%. So now we're talking. Now we are talking. So we'll watch that, manage it if we have to. Hard to believe to me when you look back here that June 2nd is only 38 days away. What happened to the year? It's flying by. Time flies when you're trading options. So there we have it. Little action on the AT&T. Thanks for tuning in, and I'll see you in the next video.